Market rallied strongly on Friday after a strong employment report. Here's what you need to know before the bell. So on Friday, a stellar employment report comes out, more than 300,000 jobs. That sparks a real broad-based rally in the markets on Friday, finally seeing a bit of that rotation that we've been talking about. As we've said previously, this has been a very one-sided rally in the markets over the last month or so, mostly technology leading the way along with communications discretionary. Everything else really not performing very well at all. Finally, on Friday, big advance, the Dow up over 700 points on Friday. On this function of this rotation, we saw healthcare, utilities, energy, financials all rallying sharply on Friday, finally getting a little bit of that flow of money as we got some short covering coming in. Small caps, mid caps, huge days on Friday. Now the question is can we get a follow through of that rotation here over the course of the next week or so? One of the supports for the energy sector, at least momentarily, was that over the weekend, Saudi Arabia announced a 1 million barrel production cut in oil. That's helping boost oil prices this morning. But markets in the short term now, very overbought here. We're well into 3 standard deviation territory above the 50-day moving average. Also still on a buy signal, so nothing really concerning there at the moment. But this deviation above the moving averages is not really sustainable for an extended period of time. So expecting a bit of just relaxation here at the moment won't be a surprise. Furthermore, we also are pushing up into that 4,300 level. That's that next Fibonacci retracement level that we spoke about last week. That's going to be a next major level of resistance. That level goes all the way back to the August highs of last year. And that's going to provide some bit of barrier right now, at least for the market short term. Again, if we can get above that, we've got some room to go, but this deviation above the moving average is temporarily a headwind. And if we take a look back historically, whenever the market has been this deviated kind of above those moving averages, again, this goes back to whether it's a bull market or a bear market, those have been short-term tops in markets repeatedly over time. And again, with the MACD signal as well as our TRIX indicator, heading up towards the upper end of the range is still in a buy signal, doesn't mean that markets can't stay up here elevated for a little bit longer, but a bit of a correctional process at some point to alleviate that overbought condition won't be a surprise. So again, we'll have to keep a watch on what's happening with the markets. This week, not a lot of activity going on, but next week we have the Fed meeting. That could provide a little bit of a headwind to the markets near term. So look to take some profits here out of technology stocks in particular. Just reduce those positions a little bit. They're well ahead of themselves. They're very overbought momentarily. Some of the other aspects of the market still may get some recovery here, see some more of that rotation occur. We'll just have to pay attention to it here over the next week or so as we go through this process. I'm your host, Lance Roberts, and that's what you need to know before the bell.